Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Tuesday morning. Hope everyone is doing well. We're getting ready for tomorrow's FOMC event where we are looking at a pretty much most expected half point hike that's going to be making its way into the market tomorrow. I was doing a video this morning that I'll be sending out a little bit later. And one of the things I talked about is how long it's been since we've seen a tightening cycle that could take us over 3%. So you might say, Rog, 16, 17, 18, 19, we start to see a tightening cycle. And then we know what happened. We had that dramatic rate cut as we went into, obviously the accommodation 2021. But we haven't seen rates over 3% in a really long time. In fact, if you look at a graph, and let me see if I still have it up. If you look at a graph of, I thought this was really interesting. Here we go. Look at, there's a shock to the system that is coming, right? So this is where we are now after the most recent hike. This is where we were. So that's that 16, 17 tightening cycle. There's the rate cuts. That's the last time we were north of 3%. And that takes us right into the financial crisis. So we're in an interesting tightening cycle where why that 3%? Two reasons for that 3%. One is one of the most frequently asked questions that I get is, Raghee, how come financials are not benefiting from this tightening cycle? And it's because we simply aren't over thresholds that are meaningful. And usually 3% is a pretty meaningful threshold. We are expected to get above that level by the time we're seeing the projections for where rates are going to be in 2023 by about May of 2023. So we're embarking. And the reason I bring this up is just as there was a lot of just absolute blather about, well, Powell's not going to raise rates because of Ukraine. Ridiculous, right? We know that's absolutely ridiculous, but people have to talk about something, I guess. And then the next thing is going to be, well, the markets are dropping and they can't hike rates. Nonsense, right? So please keep in mind where we're heading. Keep an eye. CMEgroup.com has an amazing tool, the FedWatch tool. It's free. You don't even have to be logged into the site to see it. That's how you want to understand where the target rate probabilities are. So this allows you to block out all just the nonsense you'll hear on television, because those folks have got to talk about something. By the way, so do I, right? I'll say that, hey, I'm talking about things too. But what I hope I will always do, what I hope you all will always hold me to, and I think you all do a great job of that, so I thank you, is, Rob, where are you getting this idea? Why is that the plan, right? And that level of transparency matters. And so that's where I'm getting the information. It's insanely accurate. I've been using Fed Fund futures for many, many, many years, and they've proven themselves to me to be a really powerful tool. So with that being said, let's jump on over. Because look, it's all about the Federal Reserve. Is there anything else really to talk about from a macroeconomic standpoint? Probably not. So let's go ahead and jump into your questions. After all, that is what this show is all about. Kicking it off with, I hope I'm pronouncing your name right. Very cool. Adit. And if I'm not, my apologies. Good morning, Raghee. What are your thoughts on the VIX? Oh, okay. Yep. Let's jump into that. What are my thoughts on the VIX? Sure. Not seeing much of it in my notes these days. So there for a couple of weeks in the weekly notes that I send out. So every week we take a look at what's going to happen this week in the market. And we look at, on a Sunday evening during the Sunday Notes live show, we'll take a look at just some of the technical and macroeconomic factors that I've got my eye on that are going to give me ideas for where to focus and what to trade. And it's really most interesting when we're at one end of the range or the other. So to your point, my friend, this is a daily time frame of the VIX, by the way, gang. So take a look. What we have here, if you'll notice, is when I was putting this in the notes pretty frequently, probably late part of March, maybe early April, it was because we were heading down to the layer of support. Now that we're up in that area of resistance, it probably makes sense. Probably a week or two ago, or I mean, a day or two ago, probably this Sunday's notes, I could have thrown the VIX back in there. Look how we've gone from one end of the range to the upper end of the range. You might say, Rog, what is defining the range? And I'll show you right now. I'm going to delete these lines because they go, oh my gosh, how are we going to get them back? They're all Darvis levels, gang. These are all Darvis levels. These are all levels that are already on the screen because we have the Darvis. And I'm actually using the Darvis 3.0, but you can grab the Darvis 2.0 from over at countdowntrader.com. There is no better a way to put horizontal support and resistance levels on your chart. Countdowntrader.com. Go grab it for free over there. There's your levels right there, right? How easy was that? And the other thing that I'll do is, because, I just like the color coding, I'll color code it to the Darvis line that I extended. And, when I used the thinner dashed lines on toss, you can see that you don't write over the reason the line is there. So you can still see the Darvis and then extend it forward. That's my favorite way to use the Darvis. Grab a dashed line, make it pretty thin so you can see the original automated level that was drawn, and then you're just extending it forward. And that's the easiest way to do it. It's really powerful. So that's it. And you're right, my friend. Yeah, we're right up in that area once again. We travel from the bottom of the range to the top of the range. That's how we define the range. And by the way, and I've taught you all, whether you're in the rooms or you're here in Charts and Coffee with me, I've taught you all how to put my specific slow stochastic on your charts. So here we are, right up into the area of resistance. And here we are. There's your signal. There's your area of support and the transition. This is a 21K 3D 80-20. Now, 80-20 is the most common setting. There's 75-25 and 70-30 that you'll see sometimes built in as a default on some slow stochastics. Make sure it's a slow stochastic, best non-twitchy version, and then slow this down. If there's a secret in it, this is what I've been doing for decades. This works the best, right? Try it out. You don't have to take my word for it. Try it out. And so here we are moving from one end of a sideways range to another. Are we in a sideways range? Thank you, Trade Flags, for giving me insight into the bullish momentum, neutral trend that we're still in. So thanks for the question. Is this unstable? And so to the second part of your question, my friend, I completely appreciate the concern, but we're pretty much going back and forth over a pretty well-worn path. Do you see that? Nothing new. We're just pretty much going back and forth over a well-worn path. And for me, we're still operating within the known. So I hope that helps. Stephen asked, what are my thoughts on gold? And by the way, gang, the breakdown of the VIX that I just did is on the VIX futures. That's what I keep an eye on when I'm tracking VIX. Gold. I'll tell you what, Stephen, here's a pattern I'm looking for. And let me mention this because you know what? I always found it irritating when I was learning how to trade that people who had, and it is a privilege, had the privilege to teach and coach and mentor other traders would never talk about when they're struggling. Gang, right now, let me make sure this is really clear. This hasn't happened since early January of this year. So February, March, April was smooth sailing. April 21, I'll get specific to the date. April 21 to April 25, some of these great miners, oil services, the energy sector, gold miners, GDX, GLD, we've seen some dramatic breaks of the trend, not downtrends. These were uptrends that are now no longer trending higher. Trend transitions are always going to happen. As I like to remind my traders, there's always going to be that one last trend trade. If you're a trend follower, no one knows where the markets are going to go. We just keep operating with a specific strategy as long as the underlying environment validates the setup. And eventually, one of the setups are going to get stopped out. And usually the wins for a trend trader come in clumps. Everything starts trending when you've got the macro and technical trends synced up, and you'll see Wins come in clumps, but so do losers. You're going to get stopped out oftentimes, these clusters and these clumps of small losses as well. That's where I'm at right now. And I think it's really important for me to say, hey, we had a great run, 8 weeks or more. And now trends are transitioning. So we're realigning. Now, there are other trends that we were looking at as well. It wasn't just inflation, and it wasn't just miners and oil services that we were taking advantage of. Those were bullish trends. The bearish trends that we're in are short ITB. We'd already shorted XHB, Toll Brothers. We're short Wells Fargo, short Citi. So now when I look at the disparate parts of my trades that don't necessarily have a lot to do with each other, but are open in our book. And this is mostly the mastery that I'm referring to. In the Secret Secrets Mastery, we have a number of these trades that are stopping out. A lot of you know that, me too. But we have a lot of these other trades that are built in a different narrative that are working. So the reason I bring all that up is it's really important to be transparent on this side of the mic, this side of the camera. Do we always win? Oh my gosh, no. But what makes me really excited is this feels like January. This feels like, all right, we have a disconnect of macro trends. That goes to gold. Stephen, when I look at the real yields, when I look at gold, when I look at what's happening with rates, gold is just going down to test the 200. It's broken support. It's broken the uptrend. It's in chop. And then GDX is going to follow, by the way. This is a difficult time to trade gold. However, keep an eye on this one, Stephen, and everyone who's still interested in gold. It's not as ideal a setup as a trend following by the dip, but we have what could be a minor low setup. Now, keep an eye on whatever today's high is going to be on GC. Whatever today's high is ultimately going to be on GC. Right now, it's 1867.2. So if we get above 1867.2, then what we can look at is a potential minor low bounce off the 200 exponential, which would be really interesting because we are additionally, and we have been, in fairness, oversold since the 27th of April. We're sitting in that sub 20 low section of this oscillator, of this overbought, oversold tool, aka the slow stochastic. So that could be an interesting one to keep an eye on. It's not going to be as ideal as the dips that we've bought in the past in gold, but it's what is happening right now. And if we're going to bounce, that's likely going to be the setup, okay? But it's really important to know, again, we've probably seen the most significant transition in trends. Now, mind you, the chop that we're seeing in the broader averages, this is nothing new, gang. The broader averages have been a choppy mess for, gosh, on and off since December. So to say that we're seeing a dramatic move in the indices is actually not true. We've seen choppy, bearish movement since the beginning of December. We're just seeing a lot of discussion now about the moves because they're poking at new lows. And remember, most market participants, that makes some kind of alarm in their mind go off. New highs, oh, I better pay attention. New lows, oh, I better pay attention. But but really what's happening within the context, what has been happening is usually not something that you're average. None of you are average investors or traders. You know that, right? The fact that you're educating yourself at 9:14 in the morning and not watching the dumb box, as my mom calls it, you're not the average investor. But the average investor just has no context for where price action was. Not their fault. There's a whole mechanism out there, there's a whole machine that doesn't want traders to be empowered to have the confidence to manage their own money, right? Because a lot of folks get paid a lot of money to do it for you. So remember, they're never going to want you to be that empowered. They're going to want you to know enough to be interested, but give your money to somebody else. That's the opposite. That's the opposite of what we believe here at Simpler. At least for me. I shouldn't speak for everybody, but I think that's our ethos. Give you information to make decisions on your own and understand why. Hence, I loathe black boxes. You're going to know what it is that I'm doing and why I'm doing it. And you're going to know when I'm losing, right? I've had, three or four losing trade, GLD, GDX, and one other loss. So I've had some losses, gang. But what this feels like, and this is where I'm really excited, is this looks like the rebuilding that we're about to see that we saw in January, which means that gold may not be part of that, though, Stephen. GDX may not be part of that, right? So the hardest part is letting go of the things that did work. And I know that's an awfully long answer for your question on gold, but it allows me to kind of dive into what's happening now. And hopefully for those who are saying, gosh, Rog, things got kind of tough. Agreed, they did, because the trends that were working so well have broken. And this is just part of the game. All right. Can we take a look at PPG? Of course. Zion Spear, I can't say it's near my list of things I'm interested in. It's compressing. Maybe look for some sort of momentum breakout or breakdown. I would think the continuation is more likely, but it's not a trend. So if there's anything that I personally am trying to do with as much discipline as possible, is even I have to remember, Rog, you had 8 weeks of run on an inflation commodities narrative. Let it go, Rog. You've got to let it go. Refocus on where you already saw things working. Get back in some of those financial shorts. Look for more opportunity. Thankfully, we just didn't shift and go full in, all in on inflation and commodities. Another, and slightly smaller, but these are 4 positions in our book, are ITB, Toll, Wells Fargo, Citi shorts. So those are working. So we step back and say, what part of our book is working? What part of it isn't? So that's really important. So now, what does that mean? I've got to, Zion Spear, I've got to focus on those trends, because funny enough, those are what's working, even if they're downtrends. Hey there, Alex, longtime listener. Well, I appreciate that. First time caller, I appreciate that as well. If I were to recommend any of my courses that best detail my trading strategy, which would that be and why? Alex, courses are great. It depends on whether you want to be a longer term, say, swing trader, or you want to day trade. So I guess it depends on what kind of education you're looking for. I do have another class coming up in June, and it is going to be about day trading. A lot of you have been asking me. Yes, we are doing our annual early summer day trading class. We've done it for the past 2 years. We're going to do it again. Each one is different because each environment is different. The first one was really about building the foundation of understanding the patterns that occur in day trading using volume. And then we evolved again and said, hey, daily time frames and that sentiment and that bias is really important. And this time around, what are we dealing with? How am I going to handle this market? Volatility. A lot of you know that I call it proprietary, right? It's an algorithm. That sounds so fancy. It's a volatility tool that looks at time and historical volatility to plot support and resistance. And that's one of the main tools we're using to go forward. So I guess it depends on what you want to look at. Alex, if you want a little taste of everything, come join us in the mastery, right? That's probably the best way to get sort of an all-you-can-eat buffet of every kind of strategy, every kind of market that I do trade. So that's my answer there, Alex. And I appreciate the question. Thanks so much. All right, David. Yes, caffeinate and dominate. Absolutely. What are some examples of what happens when a sector or stock goes from green to neutral and you no longer are interested in buy the dip? Gosh, I mean, look at GDX, David. That's neutral. I know it looks like a downtrend. I know it looks like it's much more bearish than it might really be. What happens? Really, what's the example of what happens? I get stopped out. That's what happens. And then I think the hardest thing to do, David, is leave it alone. I have a kind of a rule for myself, and you'll see it plays out in what we do as well. If I get stopped out of something, I'm not allowed to go right back into it, because there's a sort of revenge trade that oftentimes is part of that. GLD did that. I'm going right back to those markets we talked about earlier in the show. SLX did that. XME did that. So oftentimes the last trend trade is you get stopped out. But look how long. That's a 15-point move. So I can't be mad at XME. I mean, think about it. I can't be mad at a market that just gave me, say, that and even that, right? As far as profit, and then stopped me out to the tune of that. How can I be mad at that? Look at the green box, right? Look at the red. That's what trend trading feels like. Yes, that's the good part. And then this is the bad part, right? Can I draw a little sad face? That's the sad part. That sad face looks a little angry too. Probably pretty on point. I know my artistic capabilities, right? So that's what trend trading feels like. Now, the other part of trend trading is, what if this was your first trade? And then it feels even more awful. But if you're playing this and you're playing the probabilities throughout a quarter, throughout a year, throughout a career, right? You're going to experience a market more like this. especially if you're a trend trader. Losses like that, gains like that, and that's just the last, one or two entries, and then the last trend trade. So I hope that gives you all, some balance. This is a little difficult because of transitions. So adapt and adjust to two things. One, rebuild your watch list. For those of you that are in the Sector Secrets Mastery or are curious to join the Sector Secrets Mastery, we're coming off some trend breaks. We're really gearing up to do what we did in January, which is the beginning of the run that we had. When things break, putting them back together needs watch list building and refocus. And then that's the precursor to the next run. If you think about your P&L, up, little divot, and then I think we're kind of going through that divot and we're going to rebuild. So if you've been kind of up on the fence of, hey, Raghee, I want to see what y'all are doing in the Sector Secrets Mastery, this would be a great week. Tomorrow we have really what's going to be probably the most important session that I've done since those mid-January sessions where we said, hey, guys, macro and technicals, they are on two different planes of reality. We need to sync them up. We need to find out what's going on, rebuild. And that's what it's feeling like right now here in the beginning of May. So I'm really stoked. All right, gang, as always, thank you for joining us for Charts and Coffee. And I will see you all tomorrow, same time, same station. I also have the free video tonight. So check that out at the Simpler Trading YouTube channel. Be good to each other, gang. I'll talk with you soon.